Hey everybody, I wanted to talk about a very concerning issue, Social Security. And I hear this from a lot of people. It doesn't matter if they're already retired and getting a Social Security paycheck or if they're still in their late 30s and funding into Social Security. But the truth is, people are concerned about Social Security being there, either now or in the future. And there's good reason for concern. One is changing demographics. People are living longer than they used to. Also, we have less births and immigration here in the US, so we have a larger workforce, the baby boomers that are retiring, and it looks like less people coming into work. In addition to that, tax rates have been the same for a while. So let's talk about Social Security, but specifically, let's also give an update why this year Social Security is even getting more pressure because of the two things we've heard in the news: interest rates going up as well as inflation. So Social Security every year has its trustees run a Social Security report, which is basically a 75-year actuarial report to show, hey, based on our current money going in and money going out, how is Social Security doing? And right now we've got essentially 1 in 5 people in America, about 65 million people receiving Social Security in the form of old age and survivor benefits. So these are retirees and folks who are widows or widowers, and then also disability benefits. The trustees report, which came out last year, essentially runs, hey, when will Social Security be depleted? Now, that does not mean it's going to go to zero, but currently, as of last year's update, the Old Age and Survivors Income Trust is expected to be depleted in 2033, 1 year sooner than the report they did in 2020, and the Disability Income Trust by 2057, also 1 year sooner. Now, another component is Medicare, Part A. Currently, it is funded until 2026, which was the same in 2020. But Medicare, we'll talk about a little bit differently. Parts B, Part D, those are paid by premiums, etc. Now, what does it mean when it's going to be depleted? What it means right now is if nothing changes to Social Security, you're still going to get about 76% of your benefit, but it's going to be reduced by about 25%. If nothing's made changed to Medicare Part A, they're going to be able to cover about 91% of the projected cost. So, of course, that's a big change for people. Nobody wants to see their paycheck drop by 25%, and people don't want to spend more at the doctor and co-pays and other expenses once they're on Medicare after age 65. So, what is going on right now? Well, a couple things. Inflation. Because inflation has been high, as of yesterday, was reported at 8.5% consumer price index. Social Security recipients are going to get an adjusted cost of living adjustment. So if we look at the chart, we can see here that over the years, for a long period of time, those adjustments were very small because we had very mild Social Security. Well, out of the trust, which is several trillion dollars, anytime they're paying benefits, they're going to have to increase them anywhere between 4 to 7%. That's going to put more strain on that money. The other component, Fed raising interest rates. Well, over the last 30 years, interest rates have come down. That has done very well for bond investments. 100% of the Social Security Trust is invested in intermediate and short-term treasury bonds. Currently, right now, the 7-year treasury bond is down in value about 7% for the year because interest rates are going up, bond prices go down, and inversely. So again, it's putting more pressure on that pot. So inflation, as well as interest rates going up, it's going to affect Social Security too, most likely. When the trustees report comes out next year, it'll be interesting to see what the projections look like affecting and accounting for these two items. Now, what can you do? If you have not ran a financial plan, if you're already retired, or if you're going to be retiring within the next, let's just say 30 years, run a financial plan and make sure if benefits are cut by 25%, how does that impact you? Are you okay, or what do you need to adjust? The other thing I tell you is expect some change potentially. Congress can, and they should, come and make some amendments to Social Security. Social Security has not been amended since 1983 when Reagan pushed back the beginning or full retirement age to age 67 from 65. So Congress could help fund this. They could do a myriad of things. Lift the income limit on the wage base for Social Security, which is currently 147,000 this year, or they could increase taxes, which for folks like me who are self-employed are paying 15.2% on their income up to 147,000, or they could increase the age at which point you get full retirement benefits to 68 or 69 or even 70 years old, especially with folks living longer and working longer. But the key thing is don't get too concerned. However, just plan for what might happen. So if you haven't done it, reach out to myself, reach out to your financial planner, and ask them what would a reduction in Social Security, what would an increase in Medicare or healthcare costs do for me? Hope this is helpful. You guys take care.